morning. Good morning, good morning. How's everyone doing this morning? You guys are enjoying your profits on Aussie. So I gave this one to members. Posted it in the portfolio that we were expecting a nice move up on the Aussie after doing some analysis in our level 3 session. So it became a very high odds trade for us, even though circumstances are not the best, meaning, there's a lot of lack of trends, a lot of ranging, that sort of those sort of conditions are not the greatest for momentum to come into the markets. But when you know what to expect from the banks, then we can find the momentum before it even takes place. And so that's what we did here. We found the momentum before it even took place, and we positioned ourselves accordingly. And we'll continue to position ourselves as price plays out in our favor. And if price decides not to continue playing out in our favor, then we will exit our positions. So far that is looking quite nice. Any of you in on this trade with us? Well, members would only have had the alert, but some of you have mentioned it in the Telegram channel, so I'm sure others have jumped in. You have to be very careful just jumping into trades. If you're not jumping in at the right time, you'll get freaked out if price goes against you, right? When we're planning our trades, we're getting in at the right time for the right reason. We know where our stops should be. We have everything planned out. Okay? So, you get into trades, you have to know what you're doing, and you have to know the reason why you're doing it. If you don't, then you're looking for trouble. I always mention this to traders. You have to have your plan. Somebody wrote to me, I'm not sure if it was this morning or late last night. I couldn't find the message, but they wrote to me in regards of the euro US dollar, saying that they got in and they were a little bit nervous because they were now in a drawdown. And what do I do? Well, what you should do is have a plan before you get into a trade, and don't just open up random trades and then hope for the best. And then when it goes against you, you freak out, because that's not what you should be doing. That's, looking for trouble. Okay? If you get in, know where your risk is, know why it's there, know where the stop loss is, and why it's there, okay? And how much you're willing to lose in case it doesn't play out in the way that you thought. Okay, that's extremely important. Okay, so let's see, Tim. Aussie, you went in on lower time frame. Is that what you're saying? You took the euro as well, Jason. Nice, very good. Good. Glad to hear it. Well, it's always good when we enter into trades and it's working in our favor. So I'm glad to hear that. Okay, so yeah, I won't go into the Aussie into too much more detail, because we already did that in level 3 and discovered that there's very good upside potential here on the Aussie. And in line with that, we also have the gold chart. Okay, as you can see, gold chart is just taking a little bit longer, and there's reasons why it's taking a little. The dynamic on the charts are completely different. Okay, when you look at the gold chart and you look at the Aussie US dollar chart, the dynamics on the chart are very different. Although we did have a really good long trade from here. Price was up here, I guess, around this area when we first mentioned that this thing was going to fly, and then the momentum came in from the banks up to here, and now it's just paused. Why? Because we have an area of supply here on the chart that is going to hold price. Okay, it has to eat through this area before it can go higher. But it's likely going to do that. When we correlate the markets together and we look at what's taking place, we look at the Aussie, we see the strength coming in, we look at the euro, we see the weakness in the dollar. When we put all these things together, it starts to paint a picture of what we can expect. Now, depending on the certain dynamics that are in play on each chart, they will get to their destinations, but they will get to them on different paths. Okay, some will take longer, some will go slower. You know, some will go up and then sideways and then down and then eventually up. Some will just go straight up. You know, it all depends on what's happening with those individual charts. But what typically happens is, if the markets are saying it's going to do something specific, then it will typically go and do what it's supposed to be doing. Okay, so that's how it works. It'll just take a different path. Okay, that's all that really happens, is it takes a different path. So yeah, welcome everybody. You guys have been very supportive, liking the YouTube videos, and I appreciate that very much for getting the word out there to a lot of traders in regards to how to trade. Okay, how to trade properly, converting a lot of losing traders into profitable traders, and happy to see that. Enough is enough, right? Enough is enough. Much losing, a lot of traders losing. In this day and age, we can't have that. Things in this world are tough enough. The last thing we need is to have people losing money over speculative bets on the market. Now take a look at this. Most traders are short the euro, and we forecasted it was going higher. Right? Most people are short the Aussie. We forecasted that it was going to go higher. So something is taking place that's causing people to do the opposite of what's actually taking place, right? And we know what that is because we bring it up to your attention constantly. We're showing you what is taking place. How are retail traders constantly getting things wrong? It's really not their fault. They're just doing the best. Traders are just doing the best, right? They don't realize psychological trickery is taking place against them. They don't realize that the media is not as honest as they portray themselves to be. They don't realize that these so-called experts and the opinions of these websites on the internet that are supposed to give you good, critical, logical analysis of the markets, they don't realize that their main function is not to help make you money. You know, it's like the lottery, or it's like the casino. There's times where you'll go in and you'll make money. Does that mean the casino's your best friend and they really there and make money? No. It's that sometimes you will be lucky. All right? Sometimes you will be. But over the longer period, you're not supposed to be lucky. Because this is a business. And businesses need to make money. That's what the point of business is to make money. It's not supposed to feed your pockets. But luckily for us, we can spot the trickery. We can spot, we know that the banks, the big banks, are the ones that are controlling price. We know that they are the ones that are creating the certain patterns on the charts, okay, that they use to lure retail traders into taking the opposite side of the trades. So I want to go through the markets and just take a look at what we could expect for the rest of this month. It is September 1st, brand new day, a brand new month, and so we should be looking at these charts and seeing what is this month going to bring. Anything special? Looking out for anything? And so I think we have some good trading opportunities coming our way. Like I said, we are already invested in some trades. I personally am invested in some trades already, and they're playing out very well so far. And we'll see if there's anything else that we can spot here. Okay. Let's see. Jason also been tracking USDZAR for shorts only. Nice moves last week and this week. USDZAR. Yeah, you want to take a look at that? I did see in the forum that you had posted. US dollars are. There we go. Interesting to take a look. Shorts. Bit of analysis on this one and see what's going on. I guess we could start by taking a look at the monthly chart. Monthly chart, big move to the upside. How's the swaps on this one? Are they really sucking out your account? Any idea? Holding shorts, does it cost a lot of money to hold shorts? Look at that, 19 days. 62. So immediately when I look at this chart, I see that we are uptrending, right? Obviously. Surpasses the highs, comes up here, right? And we see this area of basing here. Price was heading down and all of a sudden a big move up. And if we draw a line across it, we can see that that area has been taken out. So that means whatever importance this area represented to the banks, you know, being that this was the area where they started to accumulate long positions. When price came down, instead of adding to their overall long positions, they took out that area. So that's significant to us, okay? Because that tells us this uptrend that we see on this chart is no longer going to be sustained. Very likely not going to be sustained, okay? That's what it tells me. So that means we should be looking for trades to the downside, right? But we don't want to just jump in and start shorting, because that could be a fake out. You know, they could take out these lows and then reverse it back to the upside. So what we want to do is we want to get a little bit more zoomed in, you know, get out our magnifying glasses, zoom into price and see what is taking place here, right? So that big move in the monthly, this was that area here. This is where it began, okay? This area here. So you can see price took out those lows and now they've come up to these highs up here, right? And now we're starting to see a move to the downside. So putting things into context, we have price removing the lows, coming up to these highs that were created before removing those lows, okay? And now it's reversing and heading lower. So again, let's zoom in and take a look at what's happening here. Now we're going to the daily chart. And on the daily chart, we have a trend line coming up like this, right? So this was an upward trend. It seems like to me, I'd have to double check and do the full analysis, but it seems like to me that that's what's taking place. We had an upward trend. And with this upward trend, they are shifting momentum to the downside off that area that we spotted on the weekly chart, right? So on the weekly, we have an area that we are responding to the downside after a low here on the monthly chart was removed, okay? So if you take a look at the whole picture of what's been taking place with this USDZAR, and start to examine what, you know, price action is telling you. It's telling you that it removed very significant area on the monthly chart that was used by the banks to propel price higher. And then it dropped through that area, created an area on the weekly chart, the beginning of a move to the downside that was responsible for removing those lows. Price rallied up to that area, and now we're getting a significant drop from this area. Okay? So as price is dropping from this area, the banks will start to fill in short orders. Okay? So our job is to spot where they are filling in those short orders, right? Because when we're following along the storyline of what's happening in price, we have to determine where to get into our positions, because we want to be doing what the banks are doing. Okay? So it looks like there may be a good spot here where the banks are filling in short orders. Okay, there would be an area, and up here would be an area. So if I was looking to get in short, these would be two areas of focus for me. I'd be looking for price to do that, or potentially even this, depending how this plays out here. Okay. Now, this is just a very brief, rough analysis that I'm doing. I'd have to spend a lot more time on this chart to really extract what the banks are doing and why they're doing it. But just as just a rough estimate of what I'm seeing and what is potentially going on. Were you getting the same analysis, Jason, on this one? And again, what about those swaps? Anybody know about the swaps on this one? It costs a lot of money to hold this one short. And we'll move on while I wait for that response. Okay, so looking at oil. So oil is in a certain predicament, and I've spoken about this in some detail in the EURUSD report and in some of the other analysis videos that we've been doing. So we're waiting on this one because right now we're in a range here on the weekly chart. Okay, and when price is in a range, it can stay in a range. That means we will get short-term momentum to the upside and short-term momentum to the downside. The question is when you get the momentum to the upside, how long will it last? Will it go halfway towards its target and then stop and then drop and then to turn back up again? Because that's what I'm seeing here. It can do this, it can do this, you know. There's a lot of things that can happen when price is in a range. So I don't want to speculate on exactly what it's going to do because I'm not sitting next to the bank seeing what they're doing live time. I'm not. I have to watch on the charts and be able to predict exactly where price is going to go before it does it so I can participate, right? That is what my job is. So I need to know where price is going to go with a high degree of certainty before it even does it. That's how I make money. And if there's nothing on this chart to dictate that price is going to do something very specific, then I don't want to get it. You had a low risk at monthly supply zone proximal for early entry. Okay, good. Nice. So in terms of oil, I'm not really looking at trading oil this time. In the future, I think it would be a good trade. We were looking at oil continuing higher. I think for the rest of the year, you know, for September at least, my focus on oil is watching to see if it breaks out of this range, either to the upside or to the downside. Okay. Right now, all the evidence is pointing in the direction that over time price is going to go higher. All right. So that is the bias. And once it produces the chart signal that it's ready to take things a lot higher, then I'll start pouncing on this one and entering into trades. But for September, for oil, what I'll be focused on is just waiting to see what it does. Break up to the upside or not. That's the key thing here. And again, the bias is that it will. Now, with respect to the dollar, okay, let's take a look here. The dollar has contacted some major supply. We've known this. We've been talking about it for a long time. And unless this area of supply gets removed, there's no reason why we should be thinking that price isn't going to drop. Okay? Because that's basically the dynamic of what's taking place here on the chart is the areas of supply are being formed, they're being contacted, they're holding, and so therefore we should be expecting price to drop. Okay. If you're new with us, you should make sure that you subscribe to our channel because we're always posting a lot of analysis, a lot of insight on what the banks are doing and how they are luring retail traders into taking opposite sides of their trades. So be in your interest, regardless of what trading style you trade, you want to know what the banks are doing and how they're tricking retail traders. So make sure you subscribe and hit the like. I think we got about 30 likes right now. If you appreciate this analysis, you appreciate the nice momentum upwards on the Aussie that we called before it even happened, make sure you hit the like for us, okay? So in terms of the dollar, the bias is to the downside for September. The only thing is that, we have a situation where we are ranging again on the weekly chart. So as I mentioned, just like with oil, in ranging, it's not the best time to be trading because momentum to the downside could be short-lived. And we want to know for certain when we get into a position that is going to actually be strong momentum that is going to kick into the market. So I'll be watching for this one to move lower. Okay, and I'll be watching for this area on the monthly chart to be removed. That's a key area that I'm looking for to be removed. Okay, I want to see that be taken out. And once that's taken out, then yes, we'll get some really nice trading opportunities to short the dollar. Now, Aussie, we were briefly speaking about the Aussie. Very strong momentum to the upside. We are expecting this momentum to continue into the short term and midterm. Remember, midterm is multiple days and weeks or weeks. So for multiple days, multiple weeks, okay? And very possibly long term, multiple weeks, multiple months, we are expecting upside, okay? So we have our targets in place and we know how to enter, when to enter, to be able to manage our positions, to manage our risk, okay? Because you never want to just start blindly entering into large positions, okay? That's not a good idea. And a lot of traders do that. And I can't get over that. How people are just so willing to risk so much of their capital, okay? If you get into a long position here, a large position, meaning it's so large that if price was to drop down to here, it would, take out half of your capital. You don't want to do that. That is not a good idea, all right? Because it's going to play with your emotions and it's going to risk too much of your capital. So you want to manage your trades so that you're getting in and putting your stop losses in very manageable areas on the chart where price will very likely not go towards, or if it goes towards it, it will not hit it. And the amount that you are putting at risk is very manageable. It will not trigger your emotions. It will not give you a heart attack. All right? That's what you want to do. You want to manage yourself and your trades as price plays out in favor. Okay? But you want to make sure you don't get in at the wrong time, because then if it turns against you, then you have the big drawdowns, right? So you want to know how much to get in based on what's taking place, based on where your stop losses are being placed. You want to know all those things before you enter in those trades, and make sure that they are manageable, that they will not take, too much of a negative effect on your emotions or your trading account. So this is looking really nice to the upside. We do suspect that this is going to continue, like I said, and we do have targets very, very high up that we are expecting to hit over time. But like I said, price is not just going to magically run straight up, okay? There's going to be a path that price is going to take. What is that path going to be? We don't know. It could be many different paths, all right? So that's why it is imperative to understand how to manage your trades, how to get in, what size positions, and all that sort of stuff. All right? But so far, so good. This is looking really good. CAD yen. What are we seeing with the CAD yen? This one's not showing us too much. Let's go on to the euro. So we are talking about the euro for some time. We were looking at the euro, we were looking at the supply and demand dynamic, and trying to determine what was very likely to happen. And one of the things that we were discussing was seeing the areas of supply getting taken out by the banks, right? So these areas of supply were created by the banks, and if the banks had an inclination to push price to the downside like this, they would have likely used this area of supply to do that, okay? But when they don't do that, then it leads us to suspect that something else is happening. Okay, that's the logical, it's a logical thing that we should be expecting. All right, if there's two doors in a room and a person wants to leave the room, if they don't go through the door on the north side of the room and they start walking towards the south side door, then the logical conclusion is that that person is going to use the south side door to leave the room, right? If you think this way, you will start to understand how the banks move price and why they are doing what they're doing. So now that they've removed this area here, you have to ask yourself, what's the chances that they're going to use this area to drop price? Okay, it's not very likely. All right, when you understand supply and demand from the institutions, it's not very likely that they would do something like that. It's possible, but it's not likely. And we have to always deal with what is the likelihood of certain things taking place, right? So that's what leads us to suspect that over time we're going to get more upside. Okay, could it go downwards? Yes, it could. All right, and I'd have to say the chances of price going downwards is 25%. Okay, which means the chances of it going upwards is about 75%. So 75% is decent, but 25% takes up a whole portion of odds. Okay, that means there are things that could take place that would cause price to drop on the euro. Okay, and there are things that could take place. Why can those things take place? It comes down to what I always say. It's the dynamics that are taking place on the chart. Lack of trends, prices in a range, this sort of dynamic opens up the possibilities for things to happen unexpectedly. Okay? When we're looking at the charts and we're looking at what's to be expected, we have to go with what's to be expected. Then we have to determine what's the likelihood of those expectations taking place. Now, when you have a lot of experience analyzing the charts and analyzing how the banks move price, you can formulate these percentages in your head. It takes a lot of time and effort, okay, and studying markets to get to these numbers. And how do I get to these numbers? Well, when you study the markets long enough and you make these calculations in your head and you write them down in your journal, and then you go back and you look at what were you saying about a certain move happening? What was the chance? And then looking at the result, you start to build this way of thinking in possibilities and percentages. And you just start to, this is a skill. Coming up with these numbers is a skill. And I've been doing this for many years now. And I've fine-tuned it. And when I look back at the accuracy of this analysis, it's very uncanny. Okay, it's very uncanny. So it's a really good, useful tool, because when I look at charts, I'm always trying to determine what's the likelihood of things happening. And if things are in my favor, I take advantage of it. If they're not so much in my favor, I know how to take advantage of it. If the markets are pointing in a certain direction that something is about to happen, and I want to take advantage of it, then I have to know what I'm risking. I have to know what the chances are that things may not go in my favor, play out in my favor. So, so when you think in that manner, it really comes down to whether you want to risk your money with those chances or not. And at first, when you want to build up an account, sometimes you want to be a little bit more aggressive, right? Because if you don't have that much to lose, then you're not that worried, because you could just save up some money through your job and then toss it into your account and start all over again. But after you accumulate a nice portion of capital, you'll tend to be a little bit more conservative in your trading. And I am very conservative in my trading. Okay, I don't like to just take risks unless I know that that the benefits outweigh the disadvantages, and it's very high odds that a certain move is about to happen. So Euro Yen, not much happening there. Been tracking that one, but not really seeing much in terms of trading opportunities. Pound, look at the pound, okay guys? I've talked about this one for quite some time in the EURUSDZAR report and in the video analysis that we've done. We've talked about this a lot. and we've been talking about how this has been fueled mainly by the rest of the markets, the euro, the dollar, and so forth. And so you can see that we're seeing a nice push in the euro, nice push in the Aussie, not much going on here. So you think the banks are focusing on this pair right now? Answer is no. What are they focusing on? They're focusing on the euro, focusing on the dollar, focusing on the Aussie. Okay, these are the pairs that the banks are focusing on. And so once they finish their focus on these pairs, then they will shift their focus onto other pairs. So I want you to watch for the rest of the week these other pairs that are not moving now. Wait to see what's going to happen, because some of the best trading opportunities I find for day trades are knowing what is the expected move overall in the markets. Gold rallying, Aussie rallying, Euro rallying, Pound rallying, Kiwi rallying, USCAD dropping, US Swiss dropping, dollar dropping. Okay, once you know what the expected move is going to be, and that it's all, the markets are all correlating at that one moment where they should all do one specific move. Okay, one goes up, one goes down, but it's all about to come into play with a significant amount of momentum. When you can spot that moment, it's a great moment, okay? Because you see what's going on with the euro, you see what's going on with the Aussie. So all you have to do is look for those other pairs that those expected moves are about to take place, and you position yourself accordingly. And what you'll find is those moves that take place on the other markets are going to set the tone for what is to be expected from the other charts. I've done a lot of trades like that. Okay, that's if you just want to get in and out really quickly, those are the type of trades that are highly predictable and have incredible success. Okay, incredible success. So I'm not giving any trading advice when I'm saying this, but I'm teaching you. I want you to start spotting these things because they happen, and they happen a lot, and I want you to understand why they happen. But let me explain to you. They don't happen all the time, okay? Why don't they happen all the time? Well, remember what I was saying, okay? Let's look at two markets. Let's look at two markets, and let's say this is the euro dollar, and let's say this is the Aussie dollar. Okay, and let's say on the euro price is down here, and on the Aussie price is down here. Okay, now the target of where we expect price to go is going to be this red line. This is the target. Okay, and as I was mentioning to you, price moves based on what the dynamic of each chart is. There's different things taking place on each chart. There could be 3 supply zones that the institutions created on the Aussie daily chart, and on the euro chart there can only be 1 supply zone created on the daily chart, which means that for price to get from where it is down here all the way up to the target, it will have to face more obstacles than the euro will have to face, moving from down here to up there. Okay, so the dynamic of how it will play out will be different. You know, whereas if you take a look at the euro, for instance, we could have a move that looks like that. Okay. Meanwhile, on the Aussie, it can look like this. At the end of the day, price got to the target that we were expecting it to get to. Why? Because both markets are correlated. We expect that if the dollar is dropping, that these charts should move up. Okay. This is looking at one time frame, you know, and for this example, we're saying the daily chart. All right. But you have to also understand that when price was here on the Aussie, price was here on the euro. And so the euro continued higher, but the Aussie dropped. So you have to understand when is the right time to say, hey, the euro is rallying right now and the Aussie is not moving. And I remember Kevin was mentioning something about how markets are correlated, and if one is moving to the upside and the other one hasn't moved there, then we should expect the other one to move up. It's not that easy. You see why it's not that easy? Because of this dynamic. Okay? There are certain times where it works and there's certain times where it doesn't. If we're at this point here on the euro, a little bit higher up, and we're at this point here on the Aussie, I would be able to spot that by looking at the certain dynamics that are in play on the markets. I'd be looking at the euro, the Aussie, the Kiwi. I would be looking at all the markets and determining where are we with respect to all the markets. And if the vast majority of the markets are telling me that they're at this stage within each individual chart of their charts, okay? Each individual dynamics of their charts. If the vast majority of the markets are telling me we're at this point, and I see the euro heading higher, it will lead me to suspect that the Aussie, if it's not moving at that time, will be heading higher. Okay? You have to understand when it's the right time to take those type of trades. Okay? So this is why it's not so simple. This is why you can't just blindly say, well, this one's moving, so that means that one should move next. Because it doesn't work that simple. It's not that easy. So there's a lot to it, and these are the type of things that we teach at the school. Right? This is why it takes time. I know there's a lot of trading education schools out there, and I know how they work. You know, come join this course, and that's 3 months, and then you're good to go. All right. Great. I wish you the best if that works for you. But that's not how really you should be learning anything. Okay? Because if you're learning a very simplistic system or strategy that you just do the same thing over and over again and you're looking for certain patterns and all that sort of stuff, then maybe that works. Maybe you could be taught a very simplistic system that within 3 months. But what we're doing is we're looking at how the markets actually work, okay? So that we're able to be extremely accurate with our analysis on a consistent basis, okay? Consistently. No matter what the market brings us, we're able to know if it's tradable or if it's not tradable. And if it's not tradable, what do we have to wait for to make it tradable, all right? These are all the things. These are all skills that you need to build up if you want to be consistently good, all right? If you're looking at trading as being something that you're going to do for the rest of your life, which I think is a great thing, then you want to build up the sort of skills that will last you a lifetime. And not just that, but you want to be able to build upon your skills. If you're spending 3 months learning a strategy that only works at certain times in the market, and you're not quite sure when those times are because you won't know until you take a handful of losing trades, then that's great. The thing is, you just spent your 3 months learning something that is very limited in its ability. Then you can take that same 3 months and study how the market actually works and learn the concepts and principles that we teach here at the school and broaden what you understand about the markets and give you certain skills that will allow you to spot trading opportunities, okay? Or to understand when is a bad time to be trading, all right? That's what we focus on. So there's no time limits, and we don't say our course is 3 months and then you're good to go, because that's not how it works. You come to the school, and depending on what kind of skills you are looking to attain, I mean, we get students that come and they trade their own trading styles, and they're just looking to better understand the CFTC report, understand the data. So they come They learn those skills, and when they've achieved those skills, they leave the school. All right, because that's what they came to achieve, and they've achieved it, and they're happy, and they leave, and that's great. If you're one of those people, that's great. A lot of people become students, and they learn the skills that they're looking for, and then they become just basic members, because they want access to the weekly EURUSDZAR reports and the analysis to help with the analysis that they're doing on their own. So it all depends on what you're looking for. And then we have students that just want to master these markets. And I just released a video yesterday of one of our students, Tim. He's one of many students that we have that is just doing incredible analysis. Okay. We have another gentleman by the name of Jason, who's in the room with us right now. His analysis is ridiculous, and his trading is very well. The results that he's shared with me is just incredible. He's achieving that consistency. He's doing what he's supposed to be doing as a student, learning the basics, learning the fundamentals, taking time, not having expectations, just going through the whole process. And now he's starting to trade with his demo account, and he's getting extremely good results. Last that he's shared with me. So it's great to see, and he knows to do it the right way. Eventually, he's going to fund a live account. I think he mentioned to me that he was going to be doing that. And then he'll be taking what he knows and using his skills to enter into trades. So I wish him the best with that. He's doing extremely well. All right, so that's the Kiwi. Let's take a look at one last one, USCAD, shall we? So the USCAD, take a look at that. It's pausing, right? Isn't that similar to what we saw with the pound? And then we look at the dollar, and we see that the dollar had some weakness, okay? So you could tell by looking at the 4-hour chart that we see a lot more weakness here on the dollar than we are seeing with the USCAD. And again, why? You must understand why. Okay? When you understand why, it goes back to that diagram that I was just showing you earlier about how it plays out through its different dynamics. When you can spot what those dynamics are, like a big trend line here, like a big bearish engulf here, when you can spot these things that are causing price to react differently, then you can understand, well, if it's reacting to those things, the expected move from those things is this. And once those expected moves take place, then we can expect that market to be realigned with the dollar and the expected move, and eventually it should move in the same direction. Okay? So that's what I'm seeing with the USCAD. Right? We got some obstacles there. We should expect it to eventually get make its way through those obstacles, and then eventually move in the same direction as them. Just take some time. Alright, ladies and gents, so if you haven't hit the like button, I would appreciate it. I think today's session was a really good one. It was nice to get together with you guys again. Thank you for all your support. The community is growing really nicely. It's great to see. The quality of students and members that we're getting is just really positive and really good. Really nice to see a lot of effort by you students and members to putting into the work to acquire the skills, and now we're seeing incredible results from you guys. So I'm really proud of you guys. So keep up the work. If you need more information, you can get us at whiteoakfx.com. And yeah, enjoy the rest of your day. And we'll see you. Okay. Take care, everybody.